Okay, let's go. A warm welcome to all of you from Zurich. It's a pleasure to have you with us today. I'm Deborah Keller and I'm your host today. When not facilitating these IFB sessions, I dedicate my time in managing and expanding the outreach of the Global Impact for Breakfast Network. IFB is an initiative supported by Ortha Impact, which is the impact investing arm of the Rianta Capital Family Office. Today's conversation will present the current market failure in the fight against grant corruption and explore how impact capital can play a central role financing scalable solutions to pursuing claims while generating a long-term positive impact for the host countries. We will also explore the role of impact investment can play in enabling sovereign governments in developing countries to pursue claims, to recover stolen assets and return them to their countries in a managed process, which maximizes the benefits to the people of their countries. Restitution Impact believes in an approach which uses methods and techniques pioneered by the litigation funding industry to provide sovereigns with demonstrably better deal than ever received before, and in a shorter time horizon to have their national patrimony restituted. Their work can be crystallized as turning the tools of the city and of capitalism against bad actors to clean up the system for the greater social good. And for that, I have with me three fantastic speakers. Catherine Mulhern, CEO of Restitution Impact. Catherine, by the way, is joining us from Florida, where it's 3 in the morning. So thank you, Catherine, for getting up that early and participating in our session. Andrew Carey, co-head of Impact Financing and Investing from Hogan Lovells, and Justin Sykes, Managing Director of Innovest Advisory. Before we start with the session, I would like to cover a few housekeeping topics. Today's session is being recorded as always. We will share with you the recording after the event in a follow-up email. We welcome you to revisit the content yourself or share it with colleagues or anyone that could benefit from the insights shared today. Since this is an informal network and community, we welcome your thoughts, comments, ideas, and questions. If you think of a question at any point for our speakers, just type them in the chat field and we'll have time to cover those after the presentation. Okay, I no longer want to keep you waiting. Over to you, Justin, Andrew, and Catherine.
Brilliant. Thank you very much indeed for that wonderful introduction, Deborah. And it's a great pleasure to be speaking at one of your events again, I think on an absolutely fascinating topic today. So following on from the introduction, I would like, Catherine, I'd like you to perhaps introduce yourself and give a bit of context to the audience today on where the restitution impact concept came from, and maybe give a sense of the team around you in this new endeavor.
Sure, Justin, thanks for that. Thanks very much for the introduction. It was fantastic and very thorough. So restitution really started as a group project between various individuals and founders, including Andrew and myself who are on this call. But there are others as well, and it's quite a diverse group of people. It includes human rights activists, development professionals, ex-analysts and quantitative analysts. It includes lawyers and investigators. All of us have had different experiences with this type of work, but all of us to a certain extent, either in private practice or as development professionals or otherwise, have worked with what I would call loosely as newly democratic post-conflict or fragile states. And my own experience is sort of typical of this. So I have a slightly diverse background. So for part of my working life, I was a law firm partner. Actually, I was a partner at Hogan Lovells, where Andrew, one of the founders, is currently a senior lawyer. And I did quite a bit of work when I was at Hogan Lovells with sovereigns who were looking at privatizations and also post-conflict states. So places, spent quite a bit of time in places like Iraq and Afghanistan. After that, I was asked to and ran an organization that was based in West Africa. And as part of the work that I was doing, worked with what was then the opposition, which then became the government of this West African country that had been under dictatorship for about 20 years. And at that time, worked with the Ministry of Justice to try to unpick what I would term the architecture of corruption, including investigating where assets have been stolen. This particular country, which is extremely poor, had billions of dollars of assets stolen. And when we went after those assets, investigated and tried to bring them back, we were hit with everything from strike suits to corporate sabotage to anything basically you could imagine. And that was really where restitution started, which is to provide support to these types of sovereigns in ways that give them access to the best lawyers, the best investigators, and really allow them to go after these assets, which are in the billions of dollars, and bring them back. But I'll hand over to Andrew to introduce himself. Slightly long-winded introduction, but sort of sets the stage a bit, Justin.
Thanks, Catherine. Over to you, Andrew.
Hi, everyone, and very, very grateful for the opportunity to speak about restitution. So yes, I am a senior lawyer at Hogan Lovells, which I have been at for 30 plus years. 20 as a partner, working in the field primarily of finance and in particular capital markets. So Catherine and I worked together on some emerging markets deals for several years. So I'm a finance lawyer by background, but I'm also co-head of impact financing and investing at Hogan Lovells. And it's with, I think, both these hats on that Catherine first approached me with this amazing concept. And I've been working with her now for a couple of years to really develop the project. And as we will cover in our conversation, Justin, really I see my job as being to make sure that the structure that we have built is robust and offers those two things that Deborah talked about, the solid returns for investors while really facilitating high volume returns of stolen assets to fragile and newly emerging states. So yeah, that's me.
Thanks, Andrew. So just in terms of format today, we're going to run through about 35 minutes of Q&A between myself, Catherine and Andrew, and then going to open it up to a broader audience participation through question and answer. We have a polling feature today, so an interactive feature where the audience, we've got a couple of questions that I'll be launching in the next 5 minutes or so to test everybody's knowledge around the issue of grand corruption and to see how close we all are to our understanding of this space. But before that, Catherine, I'd just like to take a step or two back with you. You know, in recent years, corruption allegations have been in the news on an almost daily basis, and the consequences of corruption are felt at a global scale and present significant barriers to global development. Can you sort of paint a picture for us on what we mean by grand corruption and what's the scope of the problem and what's the impact of it?
Sure. Yeah, happy to. I mean, in many ways, it does touch on, Justin, as you mentioned, really development outcomes and impacts on countries can be quite severe. I mean, the first to really look at is the numbers. So OECD and others talk about $1 trillion of assets per annum, essentially going out of the global south and illicit financial flows. Obviously, it's not just the global south. Corruption and grand corruption can happen anywhere. And what do we mean by that? Essentially, it is individuals and others who organizations who take advantage of their status or their position of authority to essentially take money or take assets that belong to the state and hide them. And we've talked a little bit about sort of the implications of this, but to give some examples, recently in the news, those of us who've been following news around sub-Saharan Africa have heard quite a bit about Isabel dos Santos, and the fact that Isabel dos Santos has been accused of stealing billions of dollars from Angola. So the amounts vary, but it's between 3 and 5 billion. And we know Angola, although is sort of in the mid-tier in terms of Africa, given the fact with COVID and the implications that COVID has had on the global South, and also the implications as well as to oil and gas and commodities prices and the plunge that they took, particularly 6 months or so ago, combined with issues that a lot of these countries have in terms of debt and debt overhang, that money could have a significant implication from the country and provide significant support from the country if returned. So that gives you a bit of a sense, but that's one of many examples. So the Philippines, billions of dollars were taken by Marcos. This was 30 some odd years ago. Quite a bit of those assets are still sitting in accounts offshore. We've heard also recently about Abacha in Nigeria. A lot of these assets that are sitting offshore are essentially generationally offshore. So they've been stolen 30 some odd years ago, now sitting in accounts, which are essentially dead accounts. And people have slowly been able to uncover them. But we're looking at, as I said, almost generational wealth that has been stolen. Andrew, do you want to talk a little bit about the scope?
Yeah. I mean, the sort of numbers that you hear in this space are, genuinely eye-popping. So the capital flight from Africa Africa alone annually is said to be 90 billion, and to give you a feel for what that means, it represents about 85% of annual foreign direct investment, overseas directors into Africa, to give you a sense of scale. Another way of thinking about it is that if those capital flows could be reversed, it would bridge about half of Africa's financing gap for achieving the Sustainable Development Goals. So these are very significant amounts, and they are being returned to countries that very badly need it. And I've mentioned the SDGs, so I might just say a little bit more about that because of the way that we see the work that Restitution is doing in relation to the SDGs. And one of the obvious ones is Goal 16, which is peace, justice, and strong institutions, where the combat of organized crime, illicit financial flows, etc., is a particular indicator. And as is the goal of developing accountable, transparent institutions, which, as you will hear, is another thing that Restitution is very focused on. So Goal 16 is important. Goal 17 in terms of partnership for the goals and mobilizing resources to improve revenue collection for countries. So they're very strong on those two. But actually, through the managed return of assets and now repatriation to countries, in fact, the potential to invest some of these reversed flows in initiatives aligned with the sovereign's own priorities, including their Sustainable Development Goals priorities, means that actually Restitution has the potential to further all of the 17 goals, which is very powerful. And as I say, we are talking about very large amounts of money.
Thanks, Andrew and Catherine. Yeah, I mean, that's remarkable that almost there's a net between flows into Africa and illicit flows out of Africa. And obviously cracking that problem could have major positive impacts on Africa's future development. So, I mean, that's really setting out the problem. Thank you. So given that's a problem, what is the solution? What's being done to tackle global corruption? Maybe starting with you, Catherine, can you tell us a little bit about what progress is being made to recover assets to sovereign states? And what are some of the key challenges that are impeding progress in this regard?
Yeah, thanks for that. It's a complicated question. And I think to a certain extent, the answers and the solutions that have been provided to date have been in many ways effective, but there's a gap missing, which is one of the things that we've really looked at in restitution, how to fill that gap. So there are a couple of things that countries have done. A lot of it is criminal, and criminal enforcement is quite a focus. The other is really to look at ways to try to move the system, so to create something which is more transparent. So there are NGOs and not-for-profits who really do tremendous work in the space, essentially providing information and also support to civil society in these places to show where the gaps are and to show what's happening, and then also find where these assets are being held, and looking at ways to sort of map the architecture of corruption. So a good example is Transparency International or the Sentry. They do very good work in this space. The other thing is the global north has started to really focus on cleaning up their own sort of systems and structures. So putting anti-money laundering structures in place, looking to really create sort of criminal enforcement mechanisms between countries, particularly countries in the global south. But part of the issue that we saw was that, particularly with criminal enforcement, it takes quite a bit of time, and there's a bit of a zero-sum game to it. So you can be 100% successful, and there are good examples recently where there has been quite a bit of success. Or if you miss and you're not able to criminally enforce, sometimes what happens is there's zero success. The other issue with criminal enforcement is it can take years. And we've seen that as well with some of the historical cases. For example, in the Philippines, it's taken, although the Philippines has managed to bring back about 30% of the assets stolen by the previous regime, it's taken about 30 years to do that. So what restitution will look at is really the civil enforcement space. Sorry, Justin, I may be jumping to the solution.
No problem at all. No problem at all.
Yeah. I'll hand off before I talk too much about the solution.
And Andrew, maybe, I mean, it sounds fiendishly complex. It sounds also that given cost and complexity, that this could be really prohibitive for developing country sovereigns to pursue on their own. And maybe sort of, before we jump to the solution, maybe giving a sense of what that complexity looks like and why it's so challenging for sovereigns to pursue these claims on their own.
Yeah, sure. Yes, they are complex and costly. I should probably say that some of them, some of the assets out there are actually hidden in plain sight, and there can be cracking the solution can actually be less complex. It's simply a case of kind of finding it and organizing the return. But nonetheless, many times what you're faced with is bad actors who are keen to hold on to their assets and have hidden them or moved them around the world, and they're sitting in different jurisdictions. So there's your first problem right there, is that you're talking about assets that are all over the world. So there are multiple countries, and so in legal terms, that means multiple legal jurisdictions. So there's a level of complexity just in terms of where the people and the assets are. But also the types of claims that have to be brought. There's a range of cases under the different legal principles around the world, around things like civil fraud, unjust enrichment, simple proprietary claims over stolen assets, i.e. just recovering something that belongs to the government, or there could be some tax fraud, breach of trust, breach of contract. And these kinds of causes of action are sort of legally heavyweight, and they need a well-funded solution. There's also many other costs involved, including of investigators and so on. So these are costs that sovereigns find quite difficult to justify, because there's risk for them, because they could spend money on, for example, expensive lawyers and not recover. Catherine talked about the sort of zero-sum gain in the criminal space. That's less true in the civil space, because you can always find ways of kind of settling that are less available in the criminal space by and large. But nevertheless, there is, from a treasury perspective of a country that is cash-strapped, quite a huge disincentive to to chase the money. There are other risks as well involved, and there's the cost one, as I talked about, but there's also the risk of being countersued, because these actors are aggressive, and they will find ways to cause all kinds of problems. And of course, there are political concerns. These actors are often quite good at manipulating the media and finding ways to win the strategic communications battle, and we help with that as well. But there are these barriers.
Thanks, Andrew. Very helpful. Just to alert the audience I mentioned we have a poll. So I'm going to just now launch the poll and keep it open for the next 10 minutes or so. And then I will provide the results shortly thereafter. So it should be available now for you all on your screens. So I think moving on to the solutions, I'm curious to understand, Catherine, what are now sort of emerging practices that can be considered best practice when it comes to asset recovery. Catherine, could you shine a light on what are some of the emerging efforts? And I think it's mentioned by Andrew earlier in the conversation. I'm particularly curious about this concept of managed asset returns. So could you perhaps explain where the industry or where the field is, and give a little bit more of a sense of what we mean by managed returns? Thank you.
Yeah, no, Justin, happy to. I mean, this is starting to come up in the context of what we talked a little bit earlier about in terms of almost assets lying around or dead assets. So because some of this has been generational, there are quite a few governments, particularly donor governments in the global north, that are starting to come up with a process where they're looking at what Justin, you called managed or structured returns. So this has come up in the context of ABACHA. So for those of you who follow this anti-corruption space, what has happened is that the government of Jersey and the UK government and the US government agreed to a managed or structured return of several $100 million that had been found of ABACHA's money. So ABACHA was the leader of Nigeria in the 90s. And that money wasn't contested. It was essentially just discovered. And as we've gone through, having done the work that we've done, the various founders of Restitution have found this as well, is that there's money in an account somewhere, or a donor sort of comes across something, or an investigator will find something, a lead on something, then that money isn't necessarily being contested, but the question is, how should it be returned? And it's one of those things that we've really looked at Restitution, as well as looking at ways to work with governments to ensure that the money has maximum impact, but is protected from what folks in the development space called leakage. And we can talk a little bit about that and how that fits in with the model. But that development, that evolution has started particularly in the last year or so to really gain traction. Because again, looking at the macro and the policy analysis around the global South, given that debt is now coming due, there are quite a few changes to governments, particularly in Africa, where people are much more open to these sorts of discussions. We're seeing a lot of movement in the space around structured returns and how that can look.
Thank you, Catherine. So I think the other innovation that seems to be emerging is the concept of using commercial litigation models for the pursuit of asset recovery on behalf of sovereigns. Turning to you, Andrew, could you perhaps just give us a thumbnail sketch of why litigation funding is being considered, and the relevance of it to this particular thematic we're talking about today?
Sure. Commercial litigation funding models are actually quite well established now. They're quite well understood by the market. There are a number of players out there. It is a industry that's been around for over a decade and is now quite mature. And that's a good thing, because it means that as restitution becomes a form of commercial litigation funding, it's standing on solid ground around things like valuation, technology, and so forth. I will say, and people on the call may know this, that commercial litigation funding has a mixed reputation. That is fair to say, and one of the reasons for that is that it is very expensive. It is expensive because the whole business of litigation does involve highly uncertain outcomes, and so investors do demand high returns as a recognition of that, at least perceived high risk. What does that mean in practice? Well, it means that many litigation funders require returns that amount to their whole investment back plus 50% or more of the recovered amounts. What do I mean by that? The investment is the costs of the litigation. So a fund will fund some or all of the costs of the litigation, and that means the person whose claims they are doesn't have to fund it. That's great. But if it's successful, they expect to be paid out of the returns on the from the award that's granted by the court or the arbitral panel, and they expect to receive a very high percentage of those recoveries. As I say, often more than 50%, and that's kind of acceptable to a corporation that might have these claims and figure that that's 50% or 40 or 30 is better than nothing, and it's costing them nothing up front. So there's a commercial kind of judgment to be taken. But for our clients, that's just politically difficult or impossible, really, for governments and countries that have lost wealth to see so much of the returns taken by the funding costs and indeed the legal costs. It's sort of unacceptable, really. And it's not just us that say that. I mean, our investors certainly say that, but so does the UN Convention Against Corruption. They've expressed disapproval of exploitative funding models. So traditional litigation funding, solid ground on which to build a proposal like restitution, but one that we've felt needs quite a bit of improvement in order to actually work in the context of the return of illicit financial flows.
Yeah, and Andrew, yeah, sorry. Yeah, no, just sorry to jump in. I think one of the things as well, just to mention here, is litigation funding. It's a very mature market. And as a result, what we've done at Restitution is used a lot of their techniques, including claims valuations. So that's really something to emphasize as well, is that this market is very well known, it's very well understood, particularly in the private equity space. Essentially, what we're doing is now moving that across into the impact space. I think there was a question in the comment box about how this works in terms of impact, and we'll talk about that in a bit more detail. But just to let people know, there's a valuation model here, which is very well trodden.
And that's a great segue. Thanks, Catherine and Andre. So I think segueing into Restitution Capital. So Restitution Impact is launching Restitution Capital, an impact investment fund manager that seeks to be an engine for empowering these democratic, anti-corruption focused countries to fight corruption by providing them with the resources to pursue those claims and the models to enable that managed return that you talked about, that managed return of restituted assets. So it would be great, I think, to share now how the concept of restitution capital came about. What is the model, and how is it concretely providing a solution to some of these problems raised in the conversation today? Catherine or Andrew, feel free to start first.
I might suggest Catherine, because I think given the questions that are coming through and the desire to really understand the impact, and we are, understand that. Maybe Catherine, you could jump in to talk about some of the things we're doing.
Yeah, sure, that's fine. So the restitution model essentially looks at some of the things that we've been discussing before, which is litigation funding, and working with these particular types of clients, which are, and again, it's quite a loose sort of category of clients. Essentially, it's transparency-minded, post-conflict, or newly democratic countries which are looking to unpick the architecture of corruption and go after these assets for their people. And all of us have worked in situations and with these types of countries and with these types of governments. And we're looking really to provide and have started to provide support through restitution to this particular type of client. So what we do is essentially end-to-end support. So we start with the claims themselves. So we look at the claims. We look at claims portfolios. So we'll look at an entire portfolio for a country, help them value it. We will then transfer those claims into a fund, working again with the government around enforcement and a litigation strategy. And then we work end to end with that client. So what does that mean? We provide support to ministries of justice. We provide support to independent commissions to continue to build granularity with these claims and also potentially increase the claims portfolio. That is a sort of impact piece of it, which is extremely important, not only for the government, but for us. So it's a mutual mentoring relationship that we develop. We also work with the governments and in line with their priorities, look to provide sort of structured return of those assets as they come back in. And that could include anything from healthcare to education for some countries. But for other countries, it also, we look to align with some of their prosperity agendas. And one of our key partners in terms of restitution is the London Stock Exchange. So we have on our board someone who's quite senior at the exchange. And we're looking at ways potentially to take a fund and make that fund and list that fund locally. So as a result, we would go through the entire life cycle with this sovereign partner, at the end of which it would then fit into a prosperity agenda. And essentially what we've done is we've said these claims are assets, deeply discounted assets, but assets similar to oil and gas or mining assets. So at the end of the process, as our investors potentially exit or could potentially stay on, we would look to crowd in private funding, local private funding. And in a sense, what we're doing is putting ourselves to a certain extent out of business and creating local litigation funders. So if you can imagine this, take, for example, Angola, we could list a fund in Angola. That Angolan fund would be a litigation funder, which would essentially go after assets and also look to clean up the system in the global north in places like London or New York. So we're shifting the power balance as well as looking at ways to provide support to these sovereigns in the near term. In the longer term, we're also looking at prosperity agendas and essentially putting these engines in terms of cleaning up the system in these places. So, sorry, I leapt forward on that.
No, thanks. Thanks, Catherine. That's really helpful. Yeah. So that's a really great context for how the fund is structured.
Yeah, I can.
Andrew, turning to you, Andrew, I think a couple of questions in the poll. We're asking very specifically around the financial returns and what is the role of investors in supporting this vehicle. Could you give us a sense of one, what role investors play practically, what their investment would be used for, and what are the returns expectations, and how does this correlate with conventional litigation funding or other asset classes in the impact investment industry?
Sure. Well, just to really double emphasize the impact piece, because it's sort of, in a way, it's kind of speaks for itself. These are large amounts of monies that are being returned to countries that badly needed, and as long as those monies are being not re-corrupted and are being put into infrastructure, healthcare. In one case, we've been talking to a provider of demining services about using recovered assets to demine, to remove ordnance, and so the impact piece is very powerful. But the numbers, as it were, our main goal is to improve on that figure I mentioned for litigation fund of 50% plus, going back to the investors, we don't aim for that. We aim actually to get about 80% of the assets to stay with the sovereign. So our returns are playing with that 20%. But we've modelled it, and we have a high confidence in our model. So we're looking for the we've structured ourselves as a fairly traditional fund structure with a general practitioner or general partner or manager, and a limited partnership, which will then invest in the separate funds. And we've modeled that the investment at the LP level would be at kind of high yield levels, which is, to be sure, lower than sort of private equity that you might expect on some litigation funds. But for reasons that we can certainly go into, we believe we've de-risked the model so that these high yield type levels of returns are a very good return for investors for the risk that the risk that they're taking. We are also funding the general partner, the manager. Harder to anticipate what those returns are going to be. They will be higher, I think, and closer to private equity, because and the risks are a little higher as well, because it's earlier funding, whereas the limited partners will be investing in actual assets, i.e. the portfolios of claims. But our model assumes a sort of 1 and 7.5% fee structure, which should drive very handsome returns for our general partner investors. I touched on de-risking. I might just say a little bit more about that, if I may, Justin.
Please do. Yeah, I think it's interesting to talk about the credit enhancement piece. Yes,
well, we can't really talk about returns without also talking about risk. And we approach this very much, whilst yes, it's very impactful, but we approach it very much from a standard model in terms of risk-weighted returns, and we do that in a few ways. We're always trying to look to ways to de-risk the investment, because we want most of the money to go back to the sovereigns. We have a sort of two-tiered portfolio approach, which means that an investment in restitution will be channeled into investments in separate funds for each country. And then each country fund, what we call our recovery funds, invest in portfolios of claims. We're very much about portfolios of claims to try to spread the risk rather than sort of betting the farm on the single claims. We spread the risk in that way, and we also look to make sure that our portfolios include some of those types of assets that Catherine touched on, where it's relatively low risk assets where everyone knows where they are, and the cost of recovering them may not be so complex. And we mix that in with others where some of the complexities I touched on earlier are very much there. And then we look for creative credit enhancement for our investors. So we're working with some DFIs, development agencies, foundations, all of whom support our project because of the good work that it does, and looking at ways to get those organs to help crowd in commercial funding. So tools such as financial guarantees, blended finance, first loss, and indeed donor funding is all part of the mix, all designed to ensure that our commercial investors are getting a solid but risk-weighted return. And as I say, driving those higher returns to the sovereigns.
Thanks, Andrew. I think we're about time, and it would be good to open up to general Q&A. But Catherine, maybe wanting to leave you with some last words. I was just wondering if you had anything more to say on the impact returns to investors. I think one element that's perhaps not been fully touched on today is the technical assistance support that Restitution will be providing to sovereigns to enhance capacity on the ground around pursuing claims. But over to you for a few final points.
Yeah, thanks, Justin. Yeah, a couple quick things that are probably worth mentioning. And to Justin's point, this goes that there's an element here where we've spent quite a bit of time over the last year or so with the sovereigns themselves. So with ministers of justice, with independent commissions, just helping sort of go through the model in a way that allows these countries who are under tremendous pressure to buy into this model. And there are a couple of things that they've come back to us with. One is that the claims portfolio piece is extremely important, because from their perspective, having that, and essentially Andrew has mentioned these recovery funds, but the sovereigns invest side by side. So in a sense, they're aligned with the investors from the very beginning. And as a result, they themselves see an asset value, whether it's an asset in terms of the fund, or also the benefits, as Justin has mentioned, in terms of capacity building or capacity empowerment and support, through to sort of a very detailed look at how those assets, once returned, will have impacts on the treasury, will have impacts on finance, and also on sort of the credit risk of the sovereign. So we really work end to end with these sovereigns. And we look at ways to work with ministers of justice, with independent commissions. One of the other groups we haven't mentioned, but it's very important to mention here, is civil society. So we work very closely with civil society, both in the global north, in terms of the work that these organizations do in terms of whistleblowing and sort of investigations. I think one of the questions asked on the Q&A was the implication in terms of AI, or sort of that big data, and that you're absolutely correct, that big data and AI is really opening up this space in ways that allow a lot of different actors to get in and start tracking and tracing a lot of these assets. And also looking at the in country as well, working with civil society, both in terms of developing whistleblowers, people who have information that need to share that information, which will allow for more claims, enforcement, or also working with civil society and independent commissions side by side. So all of those things are really built into this model. And we've had a lot of feedback, both from civil society and the sovereigns, in terms of how this model will work. And as a result, the continued feedback that we've had is that the model itself really covers all of the bases that each of these particular stakeholders have in terms of making sure that this enforcement is done transparently and with the most impact.
Thanks, Catherine. That's great. And I think, Deborah, I'm going to pass it over to you now. I think we've had some really great questions come in. Some of those have been answered, but I think there's a few that still require a good response. Just before we do that, I'm going to publish the results of the poll. I think the audience is remarkably well informed, because both questions the majority got right, which is fantastic. So I'm just sharing the results.
Justin, it's not fantastic. I like these questions when the audience get it wrong, because then they learn something. But obviously, yes, your audiences are very well informed.
Or they're at the right place at the right time to hear the solution. So very good, excellent, Deborah. I'll pass over to you now.
Thank you, Justin. Thank you, Andrew and Catherine, for this fantastic conversation. Yes, let's move on to questions. We have a few more coming in. I'll start with Derek, if you want to unmute yourself and share your question.
Yes, good morning, everyone. Thank you very much for this very, very interesting discussion. You hear me well?
Yes.
Yes, okay. Yes, I had a question regarding financial flows and the digitalization of financial flows, and whether that could be an opportunity to maybe bring transparency and shift governance. I'm thinking about blockchain, of course, and this type of technologies, but you have also crypto assets or simply traditional financial flows. And the second part is public-private partnerships. And I think Andrew mentioned the SDGs. So could that be an opportunity to allocate capital differently with more transparency as well? Thank you very much.
Have we lost Catherine?
No, I'm still here.
Okay, you're not.
Okay. Yeah, I was looking at you. No, do you want me? I can take the first one. Do you want to take the second?
Yes.
Okay. Yeah. No, I think the answer is in terms of financial flows and digitization, absolutely. There is definitely an opportunity here, particularly in terms of managed or sort of structured return. So one of the things that we've looked at and have started to work on is really how do you get the grassroots involvement in terms of paying attention to how things are spent, how things are being deployed in countries, and we work with civil society and other organizations who really look at that almost down to, making sure somebody in the street has an app to take a photo to show how things are being spent or what's happening sort of at point of contact in terms of some of these flows as they come back in terms of structured return. The other piece of this, which I mentioned briefly before, is that there is more and more transparency around big data and big data mining in terms of finding these assets. So there are civil society organizations and investigators who are starting to use big data analysis and essentially artificial intelligence to find, trace, and track these assets in a way that's become incredibly sophisticated. So all of those things, both on a sort of point of contact on the ground in terms of return. Also, the other piece is that governments themselves are really starting to focus on using blockchain and AI in terms of spending. So that's the other piece, particularly in West Africa, that we've been working with countries on, is looking at ways as this money starts coming back into the treasury, how can it best be traced, tracked, and ensured that it's spent in a way that is it's intended. So all of those things definitely open up opportunities for us and also for essentially for the sector.
Yeah, I agree with that. And then in terms of sort of public-private partnerships, and the furtherance of the Sustainable Development Goals, absolutely. I sort of hinted at this, but the fact is we are speaking to government development agencies in several countries who are all excited about this. And why? Because there's quite a powerful multiplier effect for them. So if we can use government money in the sort of global north to crowd in commercial funding, it's a very powerful. There's a very powerful multiplier effect. Think of it simply: a dollar that might come in from a government might help us crowd in $15 of private money, which will then help us recover for a given country, potentially hundreds of dollars that can then be returned in those managed ways that Catherine was talking about. So you suddenly find the $1 has resulted in hundreds of dollars going back into these impactful projects on the ground in the countries where our government donors are interested. And we recognize that our investors and donors have often very specific interests, and we can be creative. That's, I think, what we're about, really. So if we're talking to a donor and investor community that is particularly interested in healthcare in a particular country, then we can, and provided, and this is critical, that the sovereign government that we're speaking to shares that priority, because we're not about telling governments that are democratically elected and anti-corruption governments. We don't dictate to them as you'd expect, but provided it does match the priorities of our sovereign clients, then there's a real story there to be able to actually show funds flowing back into whatever the project is, provided the claim portfolio is there to back it up, which for many countries the civil claim portfolios are potentially very large.
Yeah, there was an interesting question in the chat, just to jump in, because Andrew has mentioned support, sort of guarantee support provided by donors, and somebody has asked a question, so where is the interest? Is it with pension funds and others? And what we're finding is that pension funds, insurance companies, and others have essentially ESG buckets that they've not really been able to deploy. And one of the things that is worth mentioning in terms of restitution is we believe, having done the research, that restitution is probably the strongest G in terms of ESG investment. So often G, in terms of ESG, the focus is more on environment. than anything else. But this is really an external G, because we're looking not only at providing support to these countries, but because of the way it's structured, there will be a cleanup in some of these global financial centers, as well as the impacts are started to be felt. So as a result, pension funds, insurance companies, and even private equity, who would traditionally see this as something that is probably a bit low for them in terms of return, even they have started to look at sort of running rulers over this and trying to figure out if they can invest, because the assets themselves are very well developed. I mean, we're looking at assets that are being held in the UK or the US, and it's very much a sort of clear track that litigation funders have really developed in the past. So the assets are not risky. In fact, they're very normal. It's just getting access to those assets is what restitution offers. So even the private equity folks have started to pitch up and say, how can we invest?
Thank you. Evelyn, I believe we've answered your question. If not, please feel free to speak up. Ferdinand had a question regarding the effect of Brexit. Ferdinand, do you want to share your question with us?
Yes, first of all, I wanted to thank the speakers, Andrew and Catherine. That's been incredibly insightful. And Catherine, you used a really lovely term, unpicking the architecture of corruption. And what I think we've seen today is the incredible effort required to claw back the money once it has been invested in obscure and oblique entities. Yet, at the same time, the institutions and the mechanisms that are being used to siphon off this money are still being offered. So there's a big global industry offering the type of offshore accounts and letterbox tax havens. Wouldn't it be more cost effective to address these kind of suppliers of corruption than to try and fix the problem basically after the horse is bolted?
Yes, but the whole horse has bolted. I think that's what we would say. You're absolutely right. This is not an alternative to addressing the problem of non-transparent accounting systems around the world and so on. But I will say one thing: we go after the corrupt actors without fear or favor, and that includes what we call advisor enablers. So if there are people who are, and it could be large accountancy firms, it could be large banks, it could be law firms that are part of the problem, then they should be worried, because we do see them as part of the solution, because we're going to go after those actors as well. And this is the governance piece, because if those structures start to not work, that ought to act as a disincentive. But I don't disagree with you. There are other government level solutions that need to be run in parallel to what we're doing.
And just on a follow-up with that. So one of the things that we really look to is work with some of these governments. So I think you'd mentioned the UK and Brexit. And so one of the things that we spend quite a bit of time on is working with the National Crime Agency, or the FCDO. So looking at ways to triangulate with them around issues. For example, the NCA is excellent at criminal enforcement. So we would work with the NCA and the FCDO to look at ways to continue pressure on some of these bad actors. But Andrew's point is also well taken. For those of us who've spent time advising banks or accounting firms, nothing gets a board's attention as quickly as a large lawsuit brought by someone who's sympathetic and will get attention from the press. So, and that as a result, this has maximum impact in terms of what Andrew has called advisor enablers. So again, looking at this in terms of cleanup, we see this enforcement mechanism as being a very effective way to continue to push and promote transparency globally.
Yeah.
Thank you.
It's a good idea to bolt the stable door, but we're going after the horse.
Exactly.
We have a few more questions. I want to be mindful with everyone's time. So Maybe we could answer all of these together. We have a question from Klaus Michael regarding the duration that it normally takes of such litigation fund. And Aaron is asking whether does restitution have examples of success in getting money back to countries, or are your cases still in process? And then there is a last one from Stefan. Do you have examples of policy changes you would like to see implemented that would make these efforts more successful?
So I don't know, Andrew, which
well, the answer to the first question is they are in process. We are a relatively new organization, and everything that we're doing is in process. It's difficult for us to speak about specifics. If people are interested in hearing more specifics, we can get into that and get in touch with us. I think Deborah mentioned that our contact details will be shared with you all, so do feel free to get in touch. But that's a short answer to that one. Policy changes. I mean, I should say we're not, and I think we're probably not intending to be a sort of policy lobbying organization. But some of the things, but nonetheless, we do think we have a political component, and we are seeking to, address anti-corruption. Yeah, policy changes. Some of the things that we've already touched on. I think that this idea of making it even more difficult to hide money away in offshore jurisdictions is, that's better than it was 15 years ago, but it could be better.
Yeah, the other thing on the policy side, and again, that just Andrew's correct. So our focus is really around civil enforcement, but we mentioned a bit earlier that we do work with governments and also look at the criminal side just to make sure that we're aligned, particularly for governments who are looking for a variety of reasons to bring criminal enforcement as opposed to civil. So we do spend quite a bit of time both with the governments who are going after these assets and also governments that are trying to help. And one of the things that we're keeping an eye on, it's not necessarily to say that we would drive the policy, but we think could be useful is the Magnitsky changes. So looking at the FCDO's recent change, Canada has done the same. The US certainly has it in terms of looking at individuals and putting them on lists to say that you cannot go to certain countries, or there are certain bans that are put on you based on bad actions. So again, going back to the question around impact, often bribery and corruption is connected to other violations of human rights or other issues. So we see that as potentially being quite interesting and useful in terms of the enforcement piece as well, because there are connections between Magnitsky sanctions and people who are doing bad deeds also in terms of bribery and corruption.
Fantastic. Great. Thank you very much. I'm sorry, the time is up. Thank you all for joining today. It was a fantastic session. Andrew, Catherine, and Justin, thank you for all these insights shared today. As mentioned earlier, I'll be sharing the speakers' contact details. You're welcome to follow up with them. And if you have any questions or would like to follow up on a specific topic. Thank you all very much for joining today's session. I would look forward to see you at another session of Impact for Breakfast, and wish you a wonderful rest of your day. Goodbye, everyone.